So we're looking at Kennewick Manufacturing Company, which was their supplemental for this chapter. And they've got two products. Why am I only able to make it really giant? And it's pretty straightforward. Are they doing a continuous budget, a zero-based budget, or an incremental budget? Incremental. What's zero-based again? Yeah, zero-based, you start all over and reconstruct everything every year. Continuous budgeting is what? You do it quarterly or monthly, but what's the key here? Like we just got done with the third quarter, right? September 30th was the end of a quarter. Yeah, so as that quarter fell off, I'm budgeting for third quarter 2016, right? So this is an incremental budget. It's about as easy as it gets. And really what's key is that if I go into the formula, never mind. What it really should say is that it's the 200,000 times 1.15 and 160,000 times 1.2. In other words, the percentage increase is embedded in the formula.
Well, you wanted us to do it on two sheets. I thought you wanted us to do VIP on one sheet and BIM on one sheet. Or did you want us to do?
That's fine. Is that what I asked you to do?
Yeah.
Okay. That's great.
Okay.
That's great. Hi. So that's all I asked you to do for today was the sales forecast. Now, that was it. Okay, so 6 cells. Now, what I want to tie this all into is we're talking about budgeting. The sales budget is the very first part of something called our master budget, right? And let me just find this here. Oh, there it is. So our master budget is basically what we're working on for this entire entire chapter. And this is the sales budget drives everything because based on what you're going to be generating in sales, you build all these other budgets. I'm not going to tell you that you need to memorize this, but you need to understand the flow. In other words, what do you have to do before you can do this and what follows that? And it's all super logical. You can't figure out what you're going to produce until you figure out what you're going to sell. Now, let me just pose a question. Rather than throw a bazillion models at you, if you're going to try and figure out how much you're going to produce, is that number going to equal what you're going to sell? Why not? Do you want to have exactly what you're going to sell available? I mean, in a perfect world, if you knew without a shadow of a doubt, the answer would be yes. But that's really not how it goes down, is it? There's fluctuation. Some things don't pass quality control. You probably brought in some beginning inventory, and you're going to want some ending inventory. This model, you guys, looks just like the same model that we use over and over and over. Beginning inventory plus production minus ending inventory is what you have available, right? So we're going to take a look at that model. A new concept here, desired ending inventory. How do you determine what you desire in ending inventory? Is it going to be an absolute number of units? It's a percent of what you need. A percent of what you need when? For the next month for sales. So you're going to be given desired ending inventory as a percentage of next month's sales. Can you write that formula in Excel? So you're going to have to do what? When you go back to your budgets and you're working on total needs and ending finished goods inventory, I don't have it in here properly, honestly, but it's going to have to refer to the next period's sales. From the production budget, you're going to generate your components of manufacturing, your direct materials budget, your direct labor budget, and your overhead budget. Your direct materials budget's really going to look just like production budget. What am I starting with? I beginning inventory, plus what do I need to buy, minus what do I want to have on end, my desired ending inventory. And that's going to be a percentage of next month's production budget. Cash budget, we're going to start on today. All of this feeds into your cash budget. Your sales budget drives one of your P&L main components, sales and admin. And then from your cash budget, you're also going to pull out your budgeted income statement and balance sheet. So I go back and back and back to this slide. I think it's slide number 11 or 12. So just so that you know that that's there. Okay, let's take a look. I think maybe the easiest way to do this, let's just take a look in the book at those budgets that we just identified. Yeah, good question. On a direct materials budget, do you need a budget for each component? I mean, if I'm making that fan, I've got blades, I've got a casing, I've got cores, I've got a motor. Do I need a direct materials budget for each component? Sure. And when you go to do the Kennewick manufacturing component, you'll see there's two, well, you guys tell me, how many raw materials were there to make this and so? There's two. There's raw material X and raw material Y. And the challenge when you do the direct materials budget for these guys is that are you going to do an X for VIP and an X for ZUM? Why not?
Because they each use a different amount of the product in their building of the product, so you have to figure out the ratio.
You do. And you can only do one budget because you can't add beginning inventory and subtract finished inventory twice. So it's got to be all in one column. Beginning inventory X, plus what I need to make VIP, plus what I need to make ZUM, minus my desired finished or ending inventory. What students will do is make two budgets for each, but then you're adding and subtracting the beginning and ending twice, and that's not, I mean, that's just not right. So let's turn to chapter 8, and let's just go take a quick peek at these budgets that I'm just talking about. Because really for me to sit up here and rewrite all these, I just don't think it's going to be a good learning endeavor. So let's look at them together. Page 354. I'm taking my sales. I'm in Schedule 2 looking at a production budget on page 354. Where am I getting the 10,000 units from in Excel? I'm referencing my sales budget. So equals, and then go click on the number on the budget that's got your sales number. Plus, my desired ending inventory is going to be 20% of C10. So how much do I need in total? 16,000 units. But what did I start with? 2,000. Where do I get that number? It's ending inventory from prior period. So every single one of these is a cell reference. And then you've got to be careful with absoluting and relative referencing. What am I saying when I tell you to be careful with that? What does that mean? Relative versus absolute referencing.
Whether the F4 function increased it, so that we change the, or stretch the function.
So if I F4 it and carry it, what happens to my cell references?
It will
they'll stay the same. If I F4 it, they'll stay the same. They won't change as I pull it across. Does everyone know what I'm talking about? Does anyone know what I'm talking about? I don't really have a read on this.
That makes it like, if you change the number in the cell, it'll automatically change all the numbers that are connected to the math that's with that cell.
Yes. Okay, so let's do this quickly together. Can you guys bring up Excel for me, please? Because this is important. Let's see. Let's set up a production budget. And let's do it without looking at our book. And I'm just going to put in the sales budget for 4 quarters really quickly. So there's my sales budget. My assumptions is that I have a desired ending inventory equal to percentage of next month's sales, and then of course that number needs to stand out by itself, 22%. And the only other number I think that you're going to need is ending inventory last year. Oop. $14,020 units. Can everybody see? Mel, can you see in the back? Okay. Okay. Let's just talk this through. I do not want you looking at your budget now in the book. I want you thinking about this. I want to know how much to produce these 4 quarters. What am I going to start with? What do I know I have to cover? My sales. I know I've got to at least produce my sales, right? So let's start setting up our production budget. And of course, I'd have the name of the company and blah, 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 but really we're just trying to kind of do this quickly. Okay, so I'm starting with my sales, right? Oops, I need to put my quarters up here. And then I need a total. Okay, budgeted sales. What am I going to put in here, Jake? Cell referencing. Okay, am I going to absolute it or relative reference it? If I absolute that and I pull it across, I'm going to get 45,000 each place. So I want to relative reference it, don't I? Means, and I don't want to, or I don't need to put dollar signs here, right? This sales budget could easily be on another worksheet. Is that a big deal for you guys to go pick that up in another worksheet? Put in your equal sign, click on your worksheet down there, and go grab it, right? So now pull it across and total it. Should be able to do that pretty quickly, and then I just go up. I can, how do I get to my home here? Hit your auto sum, boom. Okay, then get your little arrow or your cross down bottom right, pull it, and then total it. Okay, so I've covered my sales and my production. What's the other thing, Jess, that I know that I need? I need to cover my sales, plus I need to cover what? This is just a production budget. Number of units. I'm sorry, this is in units. How many units do I need to produce? What else do I have to cover? I've got to cover 22% of next month's sales is my, what do you call it? You know, wiggle room, right? Okay, so help me write a formula, Sherry. I'm sorry? Okay. All right. Do you guys need like a minute to catch up? Okay. You can just go up and put your auto sum. So get rid of everything in there. It's like you just hit auto sum and then. How am I going to write the formula for my desired ending inventory? Anybody? Okay, equals? H9, okay. So I want 22% of what? Well, yeah, I would just use it up here now. Am I relative referencing both of these? In other words, do I want it to go H9, I9, J9, K9? No. So which of these am I absoluting, Mel? Both, either? Just this. Because I want the other one to do this, don't I? So let's go absolute the H9, click on it, hit your F4, return, carry this forward. I am going to have to tell you here, I'm going to have to give you what the first quarter sales are for the next year, aren't I? That's just auto sum.
Well, I'm just, is that supposed to compare it to the sales budget?
Yeah, that would be the same number here. Same number here.
Right.
Right.
But from the sales budget we already did.
Yeah. This is all from the sales budget we already did. Existing sales budget. Do sales budget, then production budget. So I'm building on what I just did. Right.
That's just not the.
Okay, now wait a second. If I did a little arrowy thing down at the bottom, why does mine keep coming up 0?
Okay, so then for the rest of you, go ahead and total this because this is my budgeted sales plus I want at the end, that's what I need to produce, right? My needed production. And then all you're subtracting from that is beginning inventory. Because you didn't absolute the VAT or the G10. What's the G10? In the formula, I'm giving that. You just go, you click on the G10 and then hit your F4. Yeah.
Is that what we're doing?
And then pull it across.
Is that a per sheet? No, it's time per fee. 15.
Oh,
You're doing it for the next quarter.
So basically what we're doing here, can you tell me this formula? Here's what you put in C17. I want to have 22% of next month's sales on hand as finished goods inventory.
I did the 22% times the second quarter.
Excellent. Did you have to absolute either of those numbers?
Yeah, I did the
You have to absolute this because you don't want that to change as you carry it. Then I had to give you the next year's first quarter sales, didn't I? So you're going to have to write a different formula here. Okay, Jess, did you get this 195 resolved? Okay, it's just the total of these four numbers.
I realize that, but on the sales budget, that's not our.
Yeah, it is. Same number. If you do auto sum either of those four numbers, you've got to get the same mathematical number, right?
On sales, we got 230.
That, we're not doing that. We're
That's why I
I'm
was
just making this
asking.
up. Oh, yeah, this isn't that.
Okay.
Sorry, I'm just making these numbers totally up.
All my numbers jive except 44.
That's because you've got to write a separate formula referring to this guy in quarter four. Right? Can I total row 17? Does that make sense? No. Okay. So if I take what I need to sell, plus what I need on hand at the end of the quarter, what am I going to get? I mean, give me a title. I don't care if it's accurate or not. Needed production, units needed, something like that. The book calls it total needs. What's the easiest way to get this going? Just hit my what? Always auto sum. Auto sum. Oop, but what's the problem here? It's going to pick up that 1. I don't want that, so I'm just going to go click up and change it to C16 plus C17. You might not be the exact same place I am. But I love auto sum, but you got to look at what it's talking about. What number do I manually enter in here for my desired ending inventory fourth quarter? Yeah, it's at 11660 exactly. So then you can carry your auto sum over. Okay, so is this what I need to produce? Are these the numbers, you guys? 55,000 units, 59. Is that what I need to make? Why not? I started with something. I've got beginning inventory, so do I add or subtract it? Right, good. Last beginning inventory. Oop. That's not what I meant to do. Where's my beginning inventory number? Anybody?
Your ending inventory from last year?
Yeah, I have to give that to you somewhere, right? So what are you going to put in here, Jeannie? Equals what?
Your total needs, whatever, my sales are different, the numbers, so minus 14,020.
So do I want to do the actual number, or do I want to do a cell reference?
Yeah.
Always cell reference. Why? Because if that number somehow changed,
Then
it'll change everything. So equals, and then do I have to put a negative sign or not? I would. Equals minus H10. Right? Now, think about this. Where's my beginning inventory for the second quarter coming from? Which cell? Okay, anybody else? Can anybody else see where the beginning inventory is coming from for quarter 2? Cell number what? You're correct. Sorry? Absolutely. C17. Obviously, whatever I start the second quarter with is what I ended the first quarter with, right? So when I drag that across, do I have to relative reference it, or do I need to absolute it? What do you think? Anybody? Do I want it to change or do I want it to stay the same?
Change.
I want it to change, so I don't have to F4 it, do I? Boom, boom, boom. And then what am I going to put in G19? For the whole year, where was my beginning inventory? Which cell do you think? Beginning inventory for the whole year. Do I sum these? No. Where's my beginning inventory?
Wouldn't it be the same as one?
C19. Now what am I summing? Okay, I'm going to leave this here and you guys finish this off on your own because I can't really take any more class time because we need to start on our cash budget. But if we have our sales plus what we need at the end, here's what I need in total, right? Minus here's what I started with. What's this going to actually be then? My what?
Required production.
It's what I need to make. So you can figure out the formula to end this up. This is the same budget you're going to do for VIP and ZUM. And then you're going to translate this to the, I think it's the direct materials budget and the direct labor budget. And these are all in your book. You can see each of these have schedules in Excel. Do you feel okay taking what we've done here so far and finishing this off and translating that to the Kennewick?
So in the book, how it has it, is that you do a whole sheet with your budget assumptions.
That's fine. I mean, there's a million ways to do it. You can put sales on one worksheet, production on worksheet. You can put a whole product on each sheet. You can do a sheet of assumptions. Basically, when you go to work and you're doing budgets, your company's going to have the formatting all set up. It's totally individual. Okay, so let's kind of retract here. The only other budget, because I really want to get to the cash budget and start on that today, because that's by far the kind of trickiest of all the budgets. The only other budget that in my mind has anything kind of interesting going on in it is the overhead budget. And you'll see there's 10 budgets in here. We started on page 354 with the production budget. 356 is your direct materials. 357, direct labor. 358 is overhead. And I do want to show you just one thing about the overhead budget. Your overhead budget is determined based upon, as we all know, your predetermined overhead rates based on a what? It's an estimate, right? But it's are they all on the same basis? Are all your manufacturing overhead budgets? If you go into a heavily roboticized shop, is that going to have the same basis as a heavily labor-driven shop? No. Predetermined overhead rates based on what?
And I have a percent of direct labor hours.
It could be direct labor hours.
Driver.
It's a driver. It's based on an activity driver. So when you guys look at your manufacturing overhead budget on page 358, the very first row has to tell you what your activity driver is. And then it's going to multiply it by the variable rate. So really those first three rows is telling you, listen, how high or low is my overhead budget going to be based upon my driver? What number do you see in row 10? Fixed overhead. Why is that the same every quarter? The nature of fixed. What's on line 11 then? Fixed plus variable. Why in line 12 am I subtracting depreciation to get to line 13?
Depreciation isn't actually cash, you don't actually.
It's the only, where we're going with all this, you guys, is to get to a cash budget, because really, you live and die based on your cash flow. And I can't just take my overhead straight to my cash flow budget, because there's a depreciation component. I have to subtract that to get to cash, because depreciation isn't something I write a check for, so let me just jump ahead, good observation. That is the same on page 360 on your selling and administrative budget, the last 3 lines on page 360, same. You go through your variable S&A, you add your fixed S&A, it gets you to your total, and then you have to back out depreciation to get to cash outflow for S&A, because you're probably your headquarters are being depreciated in there, your computers are being depreciated in there. Okay, let's turn to page 362. I want you to have your first view here of a cash flow budget, and I'm going to pass out what we're going to be working on to study a cash flow budget. Gave up. No, okay. And a Gatorade to boot with that. Nice. Okay, so take some time, you guys, and really look at this cash flow budget, because this is what we sort of, as I said earlier, live and die with. Or live and die by, I should say. Let's turn on the lights for just a hot minute here. Sorry. So what I just handed out is a company called Utah Corporation. And let's just start by looking at the very top here. What is this that they've given us? It's a trial balance. Alma debits and Alma credits. Is there anything in these accounts that you want to discuss with me? That you want to clarify what it is, or? Yeah, that's accrued expenses. In my mind, I would just have in accounts payable. These are my recurring monthly expenses that I know I've got to pay early the following month, like utility bills. In my mind, I would just have it in AP, but they break it out into it's a current liability, to answer your question.
Like a variable.
It could be variable or fixed, but it's just something that happens every month. It's recurring. Okay, and then below that's my what? Yeah, just a little consolidated budgeted P&L. All sales for the Utah Corporation are on account. What the heck does that mean? There's no cash sales. Everything is AR. 80% of the receivables are expected to be collected in the month of sale. The balance the following month. So if you looked up at May, can you figure out pretty easily how much of May's sales you think they're going to collect in May? 80%, 193 times 0.8. How much of May's sales are they going to collect in June? The other 20. And same in June. Okay, I'm continuing to read now. I'm just throwing things out there, and then we're going to piece this all together. Monthly depreciation represents 12 grand of the cost of goods sold and 7 grand of operating expenses. How does that impact a cash flow budget? Can I just go up to the P&L and grab those numbers and put them in my cash budget? I've got to back depreciation out of my COGS and my operating expense numbers to convert it to a cash budget. Because part of it isn't cash, is it? It's depreciation. Then it says of the remaining costs, so once I backed out that depreciation number, of the remaining costs, 70% are going to be paid in the month they're incurred, and the balance in the following month. So for COGS, it was 110 grand in May. How much of that is depreciation? 12. Right? So it looks like about what, 98,000 would be left that was cash? Could you figure out how much of that I paid cash for in May? Sure, times 0.7. The balance, or 0.3, is paid in June. The note payable is due June 17th with interest for 4 months. Where am I going to find the amount of the note? Up in my trial balance. Do y'all know how to calculate interest for 4 months at a given rate? Interest equals, yes, that's it, principal times rate times time, and Joey hit it. Don't forget to divide by 12. The numerator is the number of months, the denominator is 12. The board of directors at their annual meeting in late May agreed to declare a cash dividend of 30 cents per share. Where do I find the number of shares? Yes, ma'am. I go up to my trial balance. My capital stock has a $200,000 balance in it. And I've got the par. So 200,000 divided by the par gives me the number of shares, doesn't it? And then they tell me how much per share. They also decide to purchase a computer in June at a cost of $48,000 with a down payment of 40% and a balance in 3 equal monthly installments. The investments include Hale Corp bonds with a face value of 25 grand that mature in early June plus interest of $1,500. So you can figure out how much cash that is. All the accrued expenses are payable in May. Where are you going to get your accrued expenses number? Up in your trial balance. And they always want a cash balance of $30,000. Before you can start a cash budget, the big cash budget, you have to do 2 little ancillary schedules. Ancillary. It's ancillary just means, a supplemental. Let's just call it a supplemental. That's easier. Okay. Why don't we all be in the same cells? B51, schedule of cash collections. It doesn't matter. Just wait. This I'm just find a B53. I don't care where you are. What 2 months am I worried about trying to figure the cash collections for? May and June. Can you see, Joe, or do I need to blow it up, or do you need to move over?
I'll just walk back. There you go.
So I'm just going to write in red here for your own information, and then I'm going to save this so that you can all see it and put it on Moodle. But the months of collection or payment go across the top. Down the side goes the month that the sales originate. So do I only have to worry about May and June if I'm worried about when I collect in May and June?
You're gonna collect from April too, aren't you?
Exactly, because the facts told me that I collect 80% in the month of sale, 20% the next month, so I've got to worry about April too, don't I? You don't have to write this in red. I'm just doing this for learning purposes. What am I trying to put here? I'm trying to put how much of April sales am I collecting in May? Where the heck am I going to find that number? How much of April sales am I bringing in-house in May? So do you have April sales anywhere? What do you have, though? You do. You have AR from your trial balance. Is that all April sales based on the facts of the case?
No, it should just be 20.
It is. It's 20% of April sales. Exactly, because technically I've already collected 80% of them. So is that 45,000 actually the 20%? Should be. What's the formula for the amount of May's sales I'm collecting in May? I'm going to give you each a couple minutes to figure that out. How much of May's sales am I collecting in May? And write a formula for it, please. What am I going to multiply by what? I'm sorry, go ahead, Jeannie, or Gretchen.
The sales are 193 times 20.
That's it. 193,000 times 0.8. 0.8. 80% of May's sales are collected in May. How much of May's sales are collected in June? Write a formula. And I'm sorry, let's go back up here. Were any of April's sales going to be collected in June? No, it's all done by then, so let's just get a 0 in there. Okay. Am I collecting any of June's sales in May? That doesn't even make sense. Am I collecting any of June's sales in June? Sure. Write a formula for it. How am I going to total up these three cells easily? Auto sum it. Am I going to absolute it or relative reference it as I carry it across? Obviously I want the cells to change and then probably make it look nice. Okay. Schedule of cash payments. Basically set up exactly the same way. And again, you're not writing in the red. I think you're going to need to leave a couple rows under each. Why am I doing that? Why do I need two? Well, I think that the payments, they talked about we have to pay for COGS and we have to pay for operating expenses, don't we? Okay, so we're at time. Here's what we need to do for Friday. Right? Is today Wednesday?
Yeah.
Here's what we need to do for Friday. You know that with both the COGS and the operating expenses, you have to pull out the depreciation to get the number we're even working with, right? And then it's 70% in the month of, 30% following month. So I would like you to complete the schedule of cash payments for Utah Corporation for Friday. As well, I'd like you to do the first 4 of the practice problems, and they're short little budgets, 8.1 through 8.4. Actually, it all uses the same numbers. Go through 8.5, please. 8.1 through 8.5, and they're pretty short. You should do them on Excel. It seems like most of you are pretty up to speed on it. We'll go over those on Friday, and then we'll spend the whole rest of the time working on our cash budget. I really encourage you, rather than trying to do these with the book open in front of you, you're not going to be learning them that way, that you try and make some sense of the budgets. Most of them are pretty intuitive. I don't care if your labels are exactly the same. I care that you understand how to write the formulas. So again, you're going to have 2 rows in each of these because you've got 2 different things, don't you? COGS and operating expenses. And you'll probably have to do something over here on the side to pull the depreciation out. Do you want me to post this on Moodle? Okay. All right.
So what are we doing on this one?
Let me turn this off and I'll be right with you.